target of 70.5. And Bajaj Auto, I think again we need an intraday breakout about 1720, and then can buy with a stop below 1700 for a target of around 1765.
Desh, thank you for those trading ideas. Let me now bring on board Sanjay Jain, Group Chief Executive Officer with Educomp. He joins us live from New Delhi. Sanjay, good morning. Thank you for joining us. Sanjay, a couple of years ago when Educomp forayed into the vocational training business, there was a lot of noise made around it. Suddenly you've decided to exit it.
Yeah, good morning. As you know, Educomp has chosen to be in two select verticals, one of them being the IP and content-based smart class vertical, and the other is the hard asset-based K-12 vertical. Both of them have a lot of potential to grow and scale up. Anything else apart from these two verticals, Educomp has chosen to divest them, and the stake sale in our JV with Pearson was a step in that direction only.
So apart from exiting the current joint venture in the vocational training business, are you also looking at monetizing money from some of your non-core businesses?
Yeah, in fact, this divestment was the third in a row in the last few months. We first got primary capital infused into our internet platform-based business, Authorgen. Then we sold a stake in the EuroKids business, and now we have divested our investment in the JV with Pearson. On the whole, we are targeting to realize about 400 crores from divestments of such businesses. So far, we have reached and grossed up an amount of 200. So yes, the plans are underway, and we would be slowly coming out of the other non-core identified businesses. Plus, there are some surplus real estate assets identified as well. These would also be monetized during the course of this year.
Sanjay, two things. I mean, firstly, I want you to talk a little bit more about how do you plan to use these proceeds that you just talked about, 400 crores as of now?
These proceeds would be largely utilized towards bringing down the gearing of the company. That means we would actually reduce the debt on the balance sheet, and to a small extent it would also be used to fund the main two identified core verticals of operations. So largely to deleverage the balance sheet.
Talk a little bit more about these land parcels that you just talked about, wherein you are looking at monetizing them as well eventually.
Yeah, see, in our K-12 vertical, we have currently about 60 plus schools running, and 40 of them are our own balance sheet. We have been investing into land parcels over all these years for future expansion purposes. But last 2-3 years, with the success that we had in our own schools, going forward, any new school would be largely set up in a joint venture model, wherein the joint venture partner would actually be bringing in the land building, and Educomp would be bringing its own IP, brand, curriculum to run the school. As a result, these land parcels that we accumulated over these years may not be used for the expansion of schools, and thus we would be monetizing them in the current year, and we expect to get close to 100 crore plus and then use those proceeds to bring down the debt of the group.
How big is your land parcel?
There are small land parcel pieces. These could be around 15 plus in terms of numbers, and nearly 8 ton of them would be monetized in course of time.
Sanjay, you just indicated that you plan to raise about 400 crore by stake sale or by land sale. You've already mobilized about 200 crore. You plan to mobilize another 200 crore. Are you likely to mobilize the next 200 crore in this financial year?
Firstly, the total amount is about 500. 400 crore is through divestment of the JVs or investments, and 100 is from sale proceeds of land. And out of 400, we already got 200. And yes, we are positive that by the end of this financial year, which is March 14, we should be in a position to realize the remaining 200 as well. Talks are underway for various other joint ventures as well.
Sanjay, analysts are expecting Educomp to report an operating loss in FY14. Is that a possibility?
Yes, that's a possibility. Company may actually incur loss in FY14. This is on account of the fact that when we are divesting the non-core businesses, a few of them have been loss-making. So a divestment process is actually shielding Educomp from the need of putting in any more money to sustain these businesses. But when we have taken a decision to divest, we are actually making all adequate provisions so that in future, as and when we exit, there is no hit at that time and everything is counted at this stage itself. Second is, there are a lot of initiatives underway in the smart class operations, and as we are trying to stabilize those key initiatives, we have chosen to go slow for a time being on the smart class, and therefore lower numbers on smart class. Thirdly, given the high interest rates that have happened in the financial markets on the whole, and given our gearing, there have been a slightly adverse impact of the interest rates. So these three reasons, companies likely to post a loss. But at the same footing, there are efforts underway which should very soon bring the company back to profitability.
Sanjay, final question. If I take the clock back 3 years ago, Educomp was the darling of Indian stock markets. Everybody liked it. Everyone owned it. Now the stock has lost nearly 95% of its peak value. Does that bother you? What has gone wrong? I would really focus the energy and efforts on doing what is right for the company. Every company passes through its own learning curve, and today we have, as I said, chosen to be in 2 select verticals wherein there is at least a big growth opportunity for next 10 years, and divesting some non-core operations. And these efforts are underway. There are few quarters wherein the results would start coming in, and in this process I think there are some challenging times. At times the results do get affected, but if one takes a really medium to long term view, I think there is immense value creation that is there in the company. So I would really be focused on doing what is right for the company, and thus we believe it should automatically lead to value creation for the shareholders. So I think yes, we are sensitive to the stock price performance, but I think we are doing all the needful that is to be done to really bring the company back on value creation for its stakeholders.
So Sanjay, post the stake sale and investment that you're looking at, what's going to be the debt level on your books?
See, currently the gross debt level, if I take both the contingent liabilities and also the on-balance sheet, we have about 3,500 crores of debt consolidated on March 31st, 2013. And as I said, 500 crore is the expectation from the sale proceeds, wherein large part would be utilized to bring down the debt. So that's the likely level, that there could be 400 crores closer to that, a debt reduction by the end of the coming year. One more point here to add, that apart from the stake sale, there has been a lot of effort in terms of squeezing cash from operations, mainly the inventory and receivables, and the last few months is leading to a lot of good results. Plus, company has also been working on swapping the existing debt with new debt of better maturity and also of lower cost. And I'm very happy to have that the company has reached a situation that in the coming year we would at least save 40 crore plus on account of interest cost savings due to better debt that we have now arranged.
Final question, Sanjay. The stock is beaten down. You are looking at reducing your debt level. Cash is coming, in the balance sheet because of non-core asset stake sale. Any thoughts on a buyback? Do you think promoters at the current juncture, they are also inclined to increase their stake?
As you know, when we did a round of fundraise in July last year, to pay off the FCCB, that time our main promoter, Mr. Shanur Prakash, has also subscribed to warrants in the company, apart from injecting state equity. And in the month of January, he brought in more capital to exercise those warrants. So that possibility is very much there. And as and when there is opportune time, I think I'm sure there would be an evaluation at the promoters level to explore increasing the stake further in the company.
Sanjay, really appreciate your time, and glad you could accommodate this interview request. I want to revisit Educomp stock. We have the 1 month price, 1 year price chart for you. The stock has collapsed by about 70% plus in last 1 year. Honestly, it's been a story of boom and a bust. Markets, they were fascinated with the stock in 2008, 2009 and 2010, and then that fascination just faded away. So education as a theme clearly has not been a very strong theme. It was a popular theme. It created wealth for some key institutional investors, but for those who are stuck in education as a theme, I think the experience in last 1 or 2 years has been rather nasty. It's not only Educomp. If you look at Aptech, it's not gone anywhere. You got some marquee investors there. Take a look at Evron. Again, that stock has only destroyed wealth in last 2 years.